Hope you got it. Okay, yeah. Let's go to now accounting standard 9 and accounting standard 7, which is like revenue recognition related. Okay, yeah. Before that, once again, let me tell about my classes and my books. See, these classes, I mean, these advanced accounting made easy, Google Drive classes only, like 365 days validity and 1.8 views. And I have covered 100% of syllabus. It is not just only accounting standards, it covers all the chapters. I mean, I told you 100 marks of syllabus is covered, and I have given 100% conceptual clarity. As I told you already, it is going to be helpful for I mean, for examination 100% without any doubt, and during articleship also you will be able to enjoy the subject when you are actually practically applying the concept. And this fundamental grip, that's going to add value to your CA final syllabus when you are learning in days. Okay, if you are interested, yes, you can call on the below numbers. Right, you can be in touch. Then, so let's go to accounting standard 9, revenue recognition. Okay, revenue recognition. First, what do you mean by revenue recognition? Recognition means what, when to record it. The standard does not talk about how much to record, because how much to record will be decided by the contract. Okay, first, what is the scope, sir? This standard will talk about only three types of revenue. One is sale of goods, sale of services, and other kinds of revenue. The other kinds of revenue is not like etc. It talks about only interest income, royalty income, and dividend income. Only these three kinds of revenue. Okay, right. And what else? What is the definition of this? Revenue is a gross inflow of cash or receivables or any other consideration. Any other consideration in the sense what? I mean, even if it is in kind. Okay, barter system, that also will be covered here. And any gross inflow of cash or receivables in the ordinary course of business, and from what, from the above discussed, whether is sale of goods or sale of services or other revenue. And if you are in a agency business, then in case of agency business, you are not supposed to read the gross inflow. You are supposed to take only your, I mean, your commission only should be considered as your income. Okay, I hope you got it. Right, sir, when to record it? See, I told you recognition means when to record and what entry to record. So here, when to record, the timing of recognition is what discussed by accounting standard 9. So first topic is like sale of goods. So when do you recognize the sale of goods? When you satisfy two conditions. With respect to sale of service also, when do you recognize? When you satisfy two conditions. With respect to income, interest income also, when you satisfy two conditions. Dividend income also two conditions. Royalty also two conditions. And an important and beautiful thing, the second condition remains the same for all these kinds of income, all five kinds of income. Okay, anyhow, we'll come to that point. With respect to sale of goods, when do you recognize it? One, significant risks and rewards related to the ownership are transferred to the buyer. Okay, first condition. When will the significant risks and rewards transfer, sir? Generally, it will be transferred along with the goods. When you when you deliver or hand over the goods to other party, then significant risks and rewards will be transferred. Right. It will be transferred, but it is not all the time. Sometimes significant risks and rewards will be transferred before the delivery. Sometimes it will be transferred even after the delivery, because you know, sale on approval basis, goods will be given first, but risks and rewards will be transferred after acceptance by the customer. Okay, so when the risks and rewards are transferred, that is more and more important. And what is the second condition? There is no significant uncertainty with respect to ultimate collection at the point of sale. I mean, when I'm selling the goods at that point of time, we should not have any significant doubt whether I'll be able to collect it. Will be able to, will not be able to. That doubt should not be there. If you have a doubt, what should I do? If you have a doubt, don't record the sales. Then you please postpone the recognition. Whenever your uncertainties are removed, that date you are supposed to recognize the sales. Okay, so significant uncertainties are not there at the time of sale, sir, but subsequently uncertainties have come in, sir. Okay, that time you cannot correct. Now you are not supposed to reverse the sales. You are not supposed to reverse the sales. You are supposed to make an appropriate provision for doubtful debts. Okay, I hope you understood that is allowance for doubtful debts is supposed to be made, right? So this is uncertainty. That is what I spoke that just now. Right. With respect to sale of goods, some different circumstances are there. Let me clear it. Let me run through it very fast. So delivery of goods is delayed because of the buyer's request. This is like Yeah, goods are with me, but I have raised the invoice. Under that circumstance, can I recognize the revenue? Yes, you can recognize the revenue, but subject to conditions. First, goods must be in hand, it should be identified, it should be packed and ready to move. Got my point? And it cannot be the buy. I mean, the seller should not be able to redirect it, or redirect it means you cannot sell it to another party. You are just like a bailer. Under that circumstance, yes, please, you will be able to recognize it. Okay, if it is subject to installation and inspection, if the installation inspection is a material process, then only after installation and inspection it is supposed to be recognized. So it is not that material, it's like a TV installation or small installation. Then you can recognize it when you deliver the item itself. Without installation itself, you can recognize the sales. Subject to approval of the customer. Sale on approval basis, have you ever heard? Yes. Sale on approval basis, if you have heard, then only when the goods are approved, that time only you are supposed to recognize it. Yeah. With respect to consignment sale, only when the consignee sells it to a third party, then only risk and rewards will be transferred. That time you should recognize it. Cash on delivery basis, cash on delivery only when it is delivered to the other party. I mean, when the cash is received by the agent or you, then it's supposed to be taken care. In case of guaranteed sales, yes, this kind of this one examination they have considered this exam. I mean question. Yes, whenever you sell the goods, no, the time itself you are supposed to recognize it, but you are supposed to make appropriate provision for doubtful debts, unexpected amount of returns. How much you are expecting, that much amount of provision for sale is provision for doubtful debts is supposed to be created. If it is an installment sale, at the time of sale itself, entire amount is supposed to be recognized. Right? Installment is recognized. There will be interest element. Obviously, that interest is supposed to be bifurcated. That should be recognized over the time. Correct? That is because interest income will be recognized only on time basis, on accrual basis, not at the time of sale. Sale or repurchase of agreement. If it is a repurchase agreement, correctly speaking, it is not a sale of goods, it is a finance arrangement. That's why it should not be taken as a sale of goods. It is like a loan given and the loan repayment. Such kind of accounting should be taking place. Subscription of publications, yes, it is generally recognized on straight line basis. Okay, right. Then second topic is rendering of services. Rendering of services, again I told you there are two conditions. One is when the service is performed, actually performed. So okay, and when the second condition is no significant uncertainty with that, no significant uncertainty with respect to ultimate collection at the point of sale. Okay, when service is performed means again there can be two kinds of, recognition can happen in two methods. One is proportionate completion method, one is completed service method. When it will be completed service method, generally it is like only one kind of activity. Suppose I am supposed to filing income tax report. I have to file income tax return for some client. When do I get the right to ask money to you? Only after completion of filing. Correct na? So when it is only one activity is involved, when significantly major work is entirely performed, then only I will get the right to ask. That time only I should recognize the revenue. But if there are like proportionate completion method, when will it be applicable? When there are like more than one activity is involved. Suppose out of 5 activities you have completed 3 activities. That means 60% of job is approximately completed. Yes, you can consider total time. You can consider, efforts involved. You can consider costs involved. Many things can be considered, but you can consider percentage of completion. How much percentage of work is actually completed? That much percentage of revenue can be recognized. Okay, installation fees. Yes, installation fee. Once installation is completed and it is accepted by the customer, you are supposed to recognize. Advertisement income when should recognized when it is appeared. This advertisement is appeared in the TV or newspaper or any source, any media, whatever it is. When it is appeared to the public, then they should recognize the revenue. Insurance agency commission. Insurance agency commission when the insurance company has accepted the policy, correct, or when the renewal of policy has happened, then that is also accepted by the insurance company. That day you can record the revenue. Admission fees for artistic performance and all. Generally, it will happen in straight line method. Suppose I am playing something. One is for half an hour, another for 1 hour, next one is for half an hour. Then time proportion basis. Again, it depends upon the cost involved. It depends upon many things that is which makes sense in the given circumstance. In that proportion, you can recognize it. Tuition fees. Generally, SLM method will be done. Entrance fees. When it is, if you're joining a school or something, when you pay the money, when you pay as a donation or something, that should go to capital reserve, that should not go to profit and loss as a revenue recognition. But if it is normal for the yearly fees or something, that should go. That also will be based on the SLM basis. That is again basically nature of services will be involved. Membership fees also, it depends. Correct. Now membership fees, is it for the 1 year? That means it is systematically on rational basis, which makes sense in the given circumstance. Financial services are performed. Correct. Now if suppose if it is a loan supposed to be given to you, I mean I am supposed to I promised you that I'll get you a loan from a bank. Okay, have I done the job? Yes. Have I given you loan sanction letter? My job is done. My job is done means yes, my services are completely done. Then I can recognize the revenue. But it is a financial service commission, maybe. Correct. I have to submit the documentation to the banker for next 1 year. Every month I am supposed to submit. In that circumstance, yearly, I mean, the entire work will be, your work is allocated over the period of 12 months. Every month it is involved. Then SLM basis may be making sense. End of the day, see, you have to understand the services and what makes sense in the given circumstance. Accordingly, you are supposed to recognize it. Let's come to the last topic, that is other income. Other income, as I told you, interest income, royalty income, dividend income. Interest income will be recognized. It will recognize on time proportion basis. It is end of the day accrual basis. When the time accrues, then interest is supposed to be accrued. With respect to royalty, correct. Now here also, how do you take the royalty? It is basically as per the agreement, because royalties will be given. Suppose book related royalty. Yes, some authors will get based on the number of books sold. Some authors will get nothing doing, like per annum this much is the royalty revenue. So it depends upon the agreement. Based on the agreement, you are supposed to recognize it. Dividend income. Dividend income is when I get the right to receive the dividend income. That is when the AGM approves the dividend. That day you will get the right to receive. That day only you are supposed to recognize the dividend income. I hope you have understood. Let's go to the next revenue related standard, that is accounting standard 7, construction contracts. Yes, these two, standard 7 and standard 9. This is the revenue. This is also obviously revenue from the only construction contracts. Correct. Now, what is a construction contract? It's a contract to construct either one asset or multiple number of assets which are closely interrelated or independent. I mean, interdependency based on the design, function, technology, purpose, and many other things. Right. It includes not only the construction, even destruction services also. Any labor contracts with respect to the, I mean, construction services also are going to be part and parcel of construction contract. See, there are two types of construction contracts. One is fixed price contract, one is cost plus contract. Yes, my standard is applicable for both kind of things. Fixed price in the sense per unit. Suppose if you construct one building, I'll give you 2 crore rupees. Yes, then how to recognize the revenue, that is going to be discussed. Cost plus contract. Yes, whatever the cost, reimbursable cost total will be taken plus 10% will be added. That is the total amount of revenue. So that is cost plus contract. In this case also, when to record the revenue is going to be discussed. Here, first and foremost thing one should ask, can the outcome be estimated really? Can the outcome be estimated? What would be my revenue? Do I know reliably, not exactly or accurately? Yes. If you say yes, I can tell. There are no great contingencies are not involved. Then I will say I will be able to tell. Then percentage completion method should be applied. Now, if you say no, sir, I will not be able to tell. It depends upon so many contingencies. Okay, then revenue will be correct. Now, recognize the revenue only to the extent of expenditure what you have booked. That too, when you are able to see, I mean, you spent 100 rupees, then we should say my sales also 100 rupees only. We should say sales also 100 rupees only when you are able to collect that 100 rupees also from the customer. Otherwise, to the extent what you said, I spent 100, sir, but I have a right to collect only 90 rupees. Then you should be able to record only 90, but not 100 rupees. I hope you understood. Yes. Chalo, let's go to, right, sir, how do you recognize percentage completion method? How do you determine the percentage? There are 3 methods I can say. First is the cost basis. Cost basis means what is the total cost you have incurred till date divided by the total estimated cost to complete the project. Okay, into 100, then percentage, how much percentage completion will be there? That percentage will be applied on the total amount of contract revenue into this percentage you should apply. That should be taken to profit and loss statement as sales. Second one is surveyor method. What is surveyor method? Yes, one civil engineer will visit the site and physically he will see the things and he will measure how much percentage is completed. He will certify it. Based on that certification number, you should be able to take it. Any other physical proportion of completion? I mean, this is also one different way. Okay, it's not cost based, it is not certification. Like say I'm constructing 200 kilometers of road. Say I have constructed like 100 kilometers of road. That means 50% of work is done. Like that also, you don't need a specialization. A surveyor is not required. We can also measure it. Okay, there are so many, I mean, these are the major methods in the world which are available. These are the, I mean, widely accepted methods which make sense also. Right. So you said contract revenue. What do you mean by contract revenue? Whatever the amount initially agreed upon, that number, that can be plus, even though if it is a fixed price contract, it may undergo a change because of these reasons. One is like variation in the work. Okay, amount of work may be increasing, amount of work may be decreasing. Then obviously a price also, I mean contract revenue also will be increasing, decreasing. Right. Next thing is what? Escalation clause. You have heard this escalation clause in the costing and etc. If the prices have gone up, then above one level, then this contractor customer has to pay to us. We are the contractors. And a claim amount which is already raised on the customer, if there is a delay causes or something, no, if the customer has defaulted something, then we will have, we being a contractor who is booking the revenue, will have a right to claim from the customer. That amount also will come. At the same time, any incentives which are already mentioned in the initial agreement, saying that if I complete this a contract within 3 years, I will get 2 crore rupees extra. Okay, that 2 crore will be considered only when there is a certainty that I will be able to complete it. And when will you be able to take this? When the construction reaches some, construction itself will reach what level? Construction reaches an advanced stage. That time only we can say we will be able to do that. Any penalties due to caused by the contractor. We have done some mistake. Correct. Now we are supposed to pay some amount to the customer. Under that circumstance, that will be reduced from the contract revenue. Right. So again, contract cost method, which we said, what is the cost method? Total contract cost incurred till date divided by the total cost for 100% of completion into 100, I said. So what do you mean by contract cost? Contract cost is nothing but cost directly attributable to the contract. So this contract cost is divided into 3 parts. One is specific cost, attributable cost, and other costs. So what is specific cost? Specifically incurred for the purpose of the contract. Any raw material, labor, I mean any depreciation related to a fixed asset which is specifically used for this purpose. Okay, right. Any cost of hiring, design, technical, all these things are specifically attributable to the contract. Allocable cost is second cost. Allocable cost means this cost has been not incurred for specifically for one project. Suppose simultaneously 2 projects are going on. Correct. Now, yes, I may be spending on labor. This labor may be working for few days here, few days over there. Then that over total labor cost is supposed to be bifurcated between these 2 projects. Like this depreciation, any machine has been used for both the projects, and depreciation cannot be charged on one. It should be charged on both on time proportion basis. Something which is rational in the given circumstance you are supposed to do. Any insurance premium paid, that also supposed to be allocated if it is necessary. And any other cost in the sense, other cost means if it is specifically, generally, general administration cost, research and development cost will never be part and parcel of contract cost. But if it is specifically mentioned in the contract agreement, if it is mentioned that this is going to be paid by the customer, then this will be taken, because this is going to be part and parcel of contract revenue, then this should be contract cost also. Then only matching concept will be taking place. Generally, no customer will pay for general administration, research and development of the contractor. Right. Next point is which all the cost will not be part and parcel of the contract cost. These are the cost. Only general administration overhead will never be part and parcel of any contract. I mean contract cost also it will not be there. It will be not the part of the inventory. It will not be part of the fixed asset. It will not be part of the intangible asset. Got it? It will never be part of anything. And selling distribution cost, obviously never. Research development, just now I told you. Depreciation of any idle plant is kept aside. Yes, whether you use it, do not use it, depreciation will be taking place, but that depreciation cannot be allocated to any of the projects because it is during the idle time that should be borne by the company, should be charged to profit and loss statement. Any abnormal loss, yes, abnormal loss also will never be part and parcel of contract cost or fixed asset or inventory or intangible asset. It will never be. Okay, right. This is one more important point. When there is an expected loss, what do you mean by expected loss? My total revenue is equal to 100 rupees, but my expected cost is 120 rupees. That means your revenue is less than the total expected cost. That means it is very much expected that you are going to incur 20 rupees of loss. And these contracts are generally binding in nature. You cannot cancel the contract just because you are making a loss. You have to construct. You don't have an option. So since it is a binding in nature, you have to book the 20 rupees of loss immediately, irrespective of percentage of completion of the contract, irrespective of whether the work is started or not, irrespective of the profits from the other projects from the same customer. It doesn't matter. The entire 20 rupees of loss supposed to be booked immediately to profit and loss statement. Okay, that is about your accounting standard 7. Okay, yeah, let us start this accounting standard 10, which is a big standard, property, plant and equipment. That is PPE short form. Correct. Now, what is property, plant and equipment? Property, plant and equipment are tangible items which are held for what? Producing goods or providing providing services or rentals or for administration purpose, where the useful life of it is greater than or equal to 12 months. Then only it is called as property, plant and equipment. This standard is not applicable for biological assets other than bearer plants. I mean, it is not applicable for the biological asset. Biological asset includes which has a life, okay, which has the life, basically living animals and living plants are called biological assets. But for bearer plants, this standard is applicable. Sir, what do you mean by bearer plant? This was asked for 2 marks question once upon a time. Okay, yeah, what is that bearer plant? Which will be able to bear the production. Okay, it will bear the produce. Agricultural produce, it is going to bear it, and that the life of that is going to be minimum of 12 months or about 12 months. It is going to be there, and the objective of this bearer plant, like a mango tree, if you take it, mango is agricultural produce. Why are you this holding this mango, the mango tree, just to get the produce? And I wanted to sell the mangoes, but I don't want to sell the mango tree. So that means remote likelihood of selling the plant. Selling the plant is not my objective. That is not my intention. Unless until it's like suppose it fell down, I'll sell. That is not the situation. Okay, that is not my intention basically. Hope you have understood. Okay, right. Sir, PPE, when do you recognize it? When do you recognize it? I mean, recognition basically, when there are three conditions basically for recognition. Three conditions is two conditions you can say. First one is when it satisfies the property, plant and equipment definition. PPE definition it should satisfy. Second things, next two things are two conditions of the asset. What are the two conditions of asset as we discussed? It should be probable future economic benefits inflow and it should be measured reliably. Okay, so that's fine. Because measurement, when do you recognize it in the books of account? When do you recognize that is initial recognition and subsequent measurement? Again, under subsequent measurement, there are two sub-classifications are there. I mean, when you spend on the initially recognized asset, further if you spend, what are you supposed to do it? And on every balance sheet date, how are you supposed to measure it? Okay, anyhow, that is going to be discussed. Initial recognition. First time when you purchase an asset, how do you recognize? It depends upon like how did you purchase. Means I paid the cash or I paid, a barter system. It has happened. I have done the self construction of the asset. So for in each circumstance, criteria will change. Suppose sir, I paid cash or I have taken loan and I have purchased it. What should I do it? Yes. So then what is the basic cost? That is the purchase price or non-refundable taxes, and till your asset comes to your place, and for the installation and trial run expenditure and any what you call present value of the decommissioning. Yes, that is discussed under accounting standard 29. Any borrowing cost if it is a qualifying asset as per accounting standard 16, which you are going to discuss, any professional fees, all these things are going to be capitalized, and you will be reducing if there is any discount or if there is any rebate from government grant or something like that, then that is going to be reduced. Otherwise, all other cost till it comes to its intended purpose. Okay, intended purpose. Till that time, whatever the cost have been incurred, it is going to be capitalized. Okay, what cost will not be capitalized, sir? As I told you already, general administration cost, never. Abnormal loss, never. Okay, cost of opening a new facility. Yes, I have constructed one factory inauguration function. No, that is not going to be capitalized. It should be charged to P&L. Any introduction of launching of a new product or new service, no, it's going to be charged to P&L. Any conducting in a business in a new location, no, it's all these are all promotional activities and etc. It doesn't relate it to any fixed asset. If you sell this with fixed asset, will I get extra value just because I did a great inauguration function or product launch function? It doesn't matter. So that's why we will not add it to any fixed asset. That is all supposed to be charged to P&L immediately whenever it is incurred. It cannot be deferred even. Any initial operating loss is not asset. Correct. The loss will come from the business. Loss will come not because of the fixed asset purchase. I hope you have understood this. Correct. If there is a deferred credit period, suppose you purchased a fixed asset where you are supposed to pay, like if the credit period is for less than 12 months, then this topic will not be applicable. If the payment is going to happen after 1 year, more than 1 year, no, that means the purchase price must be included in the interest cost. Interest cost is nothing but borrowing cost. Borrowing cost will be capitalized only when the asset is a qualifying asset as per accounting standard 16. You should refer 116, right? Generally, if the asset is ready to use, then whatever the deferred credit cost you have, credit cost, interest cost you have paid, no, that should be charged to P&L, not capitalized along with the property, plant and equipment. Suppose if you have purchased machine spares, what should I do? First question, whether the machine spares satisfy the property, plant and equipment definition. If yes, then follow accounting standard 10 and capitalize them and amortize it or depreciate it over the period of life. No, sir, it doesn't satisfy because the life of the spare is not even 12 months. Okay, then it is supposed to be treated as inventory as per accounting standard 2. Whenever it is issued for shop floor, if issued for usage, then it is supposed to be charged to profit and loss statement. Okay, self construction I have done, sir. Self construction means whatever I spoke just now, like purchase price, non refundable taxes, and etc. in the earlier slide. All those costs are going to be capitalized. In addition to that, any overheads which are spent for the construction and for the running of the business, then it is supposed to be allocated. Correct now? And if there is any borrowing, construction may be leading to 12 months or more than that. If then it will be treated as a qualifying asset as per accounting standard 16, then borrowing cost also is going to be capitalized along with that. Okay, right. So I have done the exchange of asset. There is a barter system has happened. Then there are first two conditions you are supposed to check. If you satisfy both the conditions, then we will follow fair value method. Now, if you do not satisfy both the conditions, then we will go by the cost method. Okay, what are the two conditions? Is there any commercial substance? So, what do you mean by commercial substance? The two assets what you are exchanging, that should be either in amount wise or whatever it is, the value wise, it should be different things. It should not be same item. If it is same item, then it is not called a barter transaction actually. Can you measure the fair market value of the asset given, or at least any one of the fair market value should be able to measure it? If you satisfy both the conditions, then the asset what you are recognizing, you are getting in, that should be recognized at the fair market value of what you have given. If you can't measure it reliably, then fair market value of the asset received is supposed to be recognized. Whatever the asset is coming in, I got a car, then car account debit should be fair market value of what asset I gave. First priority. If that is not there, fair market value of the car only is supposed to be taken. No, suppose I did not satisfy both the conditions, then nothing doing. Whatever the asset is coming in, that will be recognized at the book value of the old asset plus or minus if you have paid extra money or if you have received money, that is going to be adjusted with the book value. That's all. Remember, under this transaction, there cannot be any gain or loss. No loss or no gain will be taking place because it's happening at book value exactly. Next, important, beautiful concept, component accounting. Every asset you should be able to identify the significant parts of the asset. All the significant parts, amount, material, big assets, not small assets. Material amount. Okay, significant parts are there. Each part should be accounted for a separate asset, and that should be depreciated over its own useful life. And its own is the method of depreciation. Suppose one I have a big asset. Suppose I have aeroplane. General example. Aeroplane is there. There is engine. There is a body. Correct. Now engine you may apply SLM method, and for the body you may apply WTV method. It is accepted. Method of depreciation is not need not necessarily for the entire aeroplane. It should be one method. There is no such concept in this world. Okay, as per the standard internationally or India, it is never restricts that one. Okay, that is the component accounting. Each significant part of the asset should be recognized separately, and you should use the different useful lives and different method of depreciation. Okay, etc. Right. Now let's go to, we are done with the initial recognition. Let's get into subsequent expenditure. So with respect to, if you have incurred any expenditure on the already recognized asset, then whether that should go to, whether that should be charged to P&L or whether that should be capitalized along with the asset. So I have purchased this building 10 years before, now I am painting. Should I charge it? Should I charge this painting expenses to P&L, or should I add it to the building cost? See, the point is very simple. Does it add any future economic benefits to the asset? Okay, just because you paint, you will be able to sell more and the life will be increasing. Nothing, sir. Then it should be charged off. So that's all. Do you get future economic benefits inflow? Probable future economic benefits inflow. Do you satisfy both the conditions of asset? If yes, capitalize it. No, it should be charged to profit and loss statement. Okay, if you have done any major inspection, generally inspection charges, repair charges, maintenance will be charged to profit and loss. Okay, these are major inspections, like in case of ships and etc. No, there is a huge amount of money supposed to be incurred. Under that circumstance, whatever the major inspection charges, no, that should be capitalized along with the asset. It should be capitalized along with the asset. Okay, that's all, and it should be depreciated over the period of the, benefits usage basically. Next, as on the balance sheet date, what are you supposed to do, sir? As on the balance sheet date, what do you do? There are two models are available. One is cost model, one is revaluation model. When you say which model I should follow, you can follow any model. It is an optional. Sir, can I follow for each asset? No, you cannot follow for each asset. But this model should be applied for each class of fixed assets. What do you mean by each class? Plant and machinery is one class, land is one class, building is another class, furniture fixture is a separate class. Ships will be separate class, aeroplanes I have separate class, computers I have separate class. Correct. For each class, we should have one model. You cannot have for each asset. It should be only for each class of assets. Okay. If it is a cost model, I have followed cost of the asset minus accumulated depreciation minus accumulated impairment loss as per accounting standard 28, if any, that should be reduced. Revaluation model. Revaluation model, what will be doing? If you have chosen the revaluation model, no, every year you are supposed to compare what is the book value of my asset. Book value means what? Book value is nothing but carrying amount. What is there in the books? That is after the reduction of the depreciation or impairment loss, what is the number? That number should be compared with the fair market value. If there is a significant up or down is there, okay, then you are supposed to go for the revaluation accounting. Okay, it is supposed to be checked every year. So there is no significant difference in the current year, not a problem. Next year, current year you can forget about it. Next year you should be able to do it. Okay, right. So that is the thing. Sir, how do I account it? How do I account it? If it is the first time revaluation, if the value has gone up, then transfer it to revaluation reserve. No, sir, first time accounting, the value has come down, then charge it to profit and loss statement. So second year or third year, subsequently, sir, I am doing it. Then it depends upon the first year. Sir, the value has further gone up, then again transfer it to the revaluation reserve. Sir, value fell down. Value fell down. And do we have revaluation reserve on that in the reserves and surplus? Yes, sir, we have revaluation reserve. Then to the extent revaluation reserve is there, first you reduce it. Means debit the revaluation reserve. Or over and above that it fell down, sir, then charge it to profit and loss statement, my dear. So revaluation reserve, nay, sir, then charge it to profit and loss, obviously. Correct. Sir, last year actually it fell down, sir. It fell down by 100 rupees. Current year it went up by 120 rupees, sir. Current year it went up by 120 rupees. Correct. Last year when it fell down, you must have charged the first year, na? You must have charged it to P&L. So when it goes up, the same 100 rupees whatever you charged earlier to P&L, that you reverse it. That means to the extent of 100 you should credit the profit and loss statement, and to the extent of 20 rupees you should be transferring it to revaluation reserve account. I hope you understood. In case of retirement of property, plant and equipment, okay, retirement. items are, I mean asset is retired from active usage and it is held for disposal. This is important. Held for disposal means management intention is I wanted to sell it off, I don't want to keep it with me. Under that circumstance, those fixed assets or property, plant and equipment should be measured at book value or the NRV, net realizable value, whichever is lower. In this case, you may get a loss. If you get a loss, then it is supposed to be transferred to profit and loss immediately. Okay, right. So I'm de-recognizing. De-recognition in the sense, recognition means recording in the books of account. De-recognition means removing from the books of account. You're taking it out from the books of account. When do you take it out? When you sell it off, when you write it off, then you will be taking it out from the books of account. Okay. So when you are disposing it of, how do you do the accounting? See, generally when you are disposing, then you should calculate the profit or loss on disposal. So yes, what is the profit or loss? That is the sale proceeds. If you have something, you will put otherwise 0 minus the carrying amount. That number, carrying amount of the fixed asset, that number should be transferred to profit and loss statement. Okay, sir, I have followed revaluation model and there is some revaluation reserve also is there. My dear, whatever I told, sale proceeds minus carrying amount, that should go to only profit and loss account. Suppose if there is a revaluation reserve sitting in the revaluation reserve which is related to this specific asset, that should be transferred to retained earnings. That should be transferred to retained earnings. It is a movement within the statement of changes in equity. One reserve to another reserve it will go. That means it will be transferred from revaluation reserve account debit to retained earnings. It will be taking place. It will never be routed through profit and loss statement. Okay, what is depreciation? Depreciation is a systematic allocation of the depreciable amount over the life of the asset. Okay, what is depreciable amount? That is nothing but cost or revalued amount minus any residual value. Correct. Now, what do you do? Yes, you can correct it. You are supposed to depreciate the depreciable amount over the life of the asset. So, which method I should follow? Any method, but any method means is it my choice? No, it is not your choice. Which method I should follow, sir? Which method I should follow? It is based on the pattern of future economic benefits expected to flow to the company. Pattern of future economic benefit, that means the ratio of the benefits comes in. If it comes in equally, I'm expecting to come, sir, then SLM method you follow. So I'm expecting huge number of benefits in the first year and very drastically down in the next 2 years. Maybe WDU method may be very suitable. Like that, this is not a choice of the management minded. That's why it is treated as accounting estimation, not as a policy. Okay, not as an accounting policy. Here, see, depreciable amount means it's a residual value supposed to be tested every year. Okay, every year you should look at is there any change. Management should assess it. Depreciation method you are supposed to assess. Useful life also supposed to be reviewed. It should be reviewed on every year end by the management. If they feel there is something change is there, then they should account it prospectively. That should be accounted for prospectively. Prospective method. Prospectively means what? Whatever is the WDV sitting on 31st March, that will never be changed. Same number will be depreciated over the remaining life, using the revised life or revised method of depreciation or revised residual value should be used for this. I hope you understood. Okay, right. Let's go to accounting standard 12, government grants, because this also is slightly linked with accounting standard 10, fixed asset, property, plant and equipment. So that's why I wanted to do 12. Next I wanted to do 16. Next I will go to accounting standard 26. Next I would like to go to accounting standard 28. Then I will cover, what are linked standards, I would like to do it at one point of time. Okay, that's my target basically. Okay, accounting for government grants, which is a very small topic. What do you mean by government grant? Government grant means government assistance. That is government help basically. How they help? By way of cash or by way of kind. Why they do? Because I have complied with the past conditions what they have kept, or I promise that I will satisfy the future condition. That kind of grant is government grant. Which government? Any government, maybe national government, international government, local government, state government, all kinds of government, but not from individuals and not from any other organizations. Grant means a subsidy you call. Grant means duty drawback you can call. Grant, different incentive, another word also people will use. It can be used in different words, but you should catch whether it is a government grant or not. Okay, how do you account for this? Government grants are accounted in two approaches. One is capital approach, one is another one income approach. What do you mean by capital approach? Under a capital approach, no, whatever you receive, no, that will be transferred to capital reserve. Okay, right. Under income approach, what will happen? You will transfer it to profit and loss statement. Okay. So in profit and loss statement, how do you transfer? We will transfer it in the we'll keep it in a deferred government grant account whenever the money comes, and we'll transfer it to the, I mean, in the ratio of the expenses, you're expected to incur. In that ratio, it will be transferred to profit and loss statement, my dear. It won't be transferred all of together in one shot. We don't do that job. Okay, sir, when do you go with capital approach? When it is like government is behaving like a promoter. Promoter is the one who initiate the starting and, I mean, incorporation process. No, then if the government behaves like a promoter, no, under that circumstance, you will follow the capital approach. Otherwise, sir, I already started. Now it is for the government giving a grant for my maintenance or for supporting some other fashion. Then only income approach is going to be applied. Okay, when do you recognize the government grant? There are two conditions to satisfy. Is it reasonably, I mean, there is a reasonable assurance that the conditions kept by the government will be satisfied, and there is no doubt on the receipt of money. Okay, no ultimate collection is reasonably certain. I'm sure I'm going to get the money, whatever government promised. Then you should do it. But these are the basic conditions, but there are some special circumstances. In the special circumstance, no, what is special circumstance? What did you do in the circumstances? We'll book the revenue immediately in the year in which that money has come. What are those two circumstances? There are two circumstances. Circumstance number one: immediate financial support by the government only to my company, not anybody in the industry. Entire industry, only I got it. Why? Means we are in a deep trouble or something. The government gave some money. That is not, I mean, you cannot say that I will defer it for next number of years. Nothing doing, it should be transferred to profit and loss statement in the same year. Government has given me money in the current year, but why they gave me current year? Because I have incurred the losses in the last year, or I have incurred some expenses in the last year. It means expenditure or losses are booked in the last year, but government grant, last year I thought they will never give only, but suddenly they realized when they gave me that now I cannot go back and book the government grant income in the last year. Correct? I cannot reopen the books now. That's why you should book it in the immediately current year. You cannot defer it for next few number of years or something. Okay, right. So government grants, I told you, government grant is government assistance in cash or in kind. So first one I am discussing kind. Kind, if you receive something in kind, that is land, machine, or any intangible asset, something, no, then it is called non-monetary asset. You have got it. So how do you record it? How do you record? Means first it has come at free of cost, sir. 1 paisa also I did not pay. Then you should record the land at a nominal value. Nominal value means 1 rupee, 2 rupees, something small, very small, negligible amount. You should record it. No, sir, I have paid something. Correct. Now, concessional price I paid. Means 100 rupees is the market value. Government sold it to me for 40 rupees. How much you spent? 40. Then record it 40. Land account debit 40. Cash I paid 40 na 40. Record karo. Okay. That's if it is a non-monetary government grant this way. Sir, if I have received the monetary government grant, monetary means you paid the money. Okay. I mean, government gave you money. Okay, first what has happened? First I went to market and purchased one machine. Because I showed the bill to the government. That's why government gave me some cash later. First I paid it to the supplier. Subsequently I got the money. Okay, now question will be, is it related to asset? Yes, it is related to property, plant and equipment. Excellent. So is it a depreciable asset or non-depreciable asset like land or something? So if it is a depreciable asset, there are two methods. Out of these, which method I should follow? It's a choice. It's a pure accounting policy choice. You can select whichever you want. Okay, method number one. You can whatever the amount government has given the cash, that can be reduced directly from the cost of the asset. You can reduce it. You reduce it. I mean to say cash account debit to property, plant and equipment. And whatever left over, that should be depreciated over the life of the asset. And the next method is what? Next method, whatever you received, that you should be presenting as a deferred government grant. And deferred government grant should be allocated, should be transferred to profit and loss statement over the period of life of the asset in the ratio of depreciation. Remember, deferred government grant will be transferred to profit and loss statement in the ratio of the depreciation over the life of the asset. No, sir, that's over. So I have received the money because I purchased land. Now the question, are you going to spend any expenditure with respect to land? Are you going to spend any expenditure with respect to land? If you say yes, If you say yes, then then you should be deferring whatever the cash you have received. You should say cash account debit to deferred government grant, and you're going to spend money in the future. No, that deferred government grant should be transferred to profit and loss in the ratio of the future expenses. In the ratio of future expenses, you are supposed to transfer it to profit and loss statement. No, sir, I don't have any other further expenditure to be incurred. Then it should be transferred to capital reserve account. Okay, and the third thing, sir, I have received money. That is for my related to P&L expenditure, sir. Again, here also there are two approaches, two methods are there. In these two methods are company's accounting policy choice. Method number one, you can directly reduce it from the respective expenditure. Second one, it should be presented as other income. Next, again and again, listen carefully. Government grant can never be a revenue from operations. It should be always an other income if you want to take it. But my point, government grant received is a financing activity. You should not reduce it from the asset, even though it is related to a fixed asset. You should not reduce it from the respective asset. It should be shown as a financing activity in the cash flow statement. Sir, last point is refund of government grant. So when do you refund the government grant? Correct. Now, when you refund the government, when you have not satisfied the conditions, then you have to refund the government grant. Correct. Now, when you're refunding the government grant, what is the accounting you should follow? Whatever the accounting you have followed, no reversal accounting. Earlier, sir, I have credited the P&L. Now debit the P&L. Sir, earlier I have credited the fixed asset. Now you debit the fixed asset. That's all. That is how you are supposed to do it. Sir, earlier I have created the fixed asset. Subsequently, I am supposed to pay. Now debit the fixed asset. PPE account debit to cash. You are supposed to do it. So now because of this, my asset value has gone up. Yes, asset value has gone up. You cannot do anything. Now this prospectively depreciate karo. Prospectively depreciate means the increased amount of PPE should be depreciated over the remaining life of asset. Right. Sir, I have kept it under the deferred government grant account. Yes, excellent. If you have kept it under deferred government grant account, got it now. Then what I'm paying back, sir? Yes, the deferred government grant account debit to the extent the amount is sitting in the balance sheet. Balance sheet balance is that number will be debited, and cash account whatever you are paying that will be credited. There will be remaining either debit or credit that will be transferred to profit and loss statement. That's all, my dear. This is very small standard. Let's go to next standard, that is accounting standard 16, borrowing cost. What is borrowing cost? Borrowing costs are costs directly related to borrowing. I mean, I'm incurring the cost because I have borrowed money. If I had not borrowed, I would have not incurred. Correct now? Yes. This standard does not deal with this standard does not deal with what is that it does not deal with. It does not deal with the cost on the equity, cost on the preferential capital, which is considered as an equity. Correct now? It does not deal with the imputed cost or opportunity or what do you call notional cost. Basically, yes, opportunity or notional costs are not considered as a borrowing. Borrowing cost means actually you must have paid for the borrowing. Okay, then only this cost will be taken. Sir, borrowing cost, what do you mean by borrowing cost? Standard has given 5 types of borrowing cost. One, as you know, interest cost is a borrowing cost, and any other commitment charges for the loan. Yes. Next, amortization of discounts. That is, suppose if you have issued the debenture for a discount, then the discount will be amortized over the period of the debenture. Yes, amortization of discount or premium. I mean, that is if you have issued at a premium. You got my point. If you say redemption and premium, correct? The redemption and premium. Debenture redemptions at premium. Then I excess 20 rupees will be obviously amortized over the life of the debenture. That is also borrowing cost. Any ancillary cost. What do you mean by ancillary cost? Like processing fees. I mean loan registration charges or any other brokerage charges or any such kind of any ancillary cost which are all incurred for the purpose of borrowing. Only because you are borrowing, you have paid it. Okay, that is also borrowing cost. That accounting is due by accounting standard 16, guys. Okay, it's not like somewhere should I refer. Generally, people don't know that they have to come to accounting standard 16 are not a general thing. Okay, finance charges in respect of assets acquired under the finance lease. Yes, this is nothing but in case of hire purchase. What if you have purchased some asset under hire purchase? No, there is a finance charge is included. That finance charge, how should I account for? That also should be charged to P&L and should be capitalized if it is a qualifying asset. Next, there is a foreign exchange difference on the foreign currency borrowing to the extent it is regarded as a borrowing cost. Recently, for one pharmaceutical company, they were constructing 125 crores of one plant. In that, they have borrowed some ECB loan. Correct, na? I mean, external commercial borrowing from their parent company. They have incurred this foreign currency, foreign exchange. Exactly same thing. Whatever I'm going to teach you, that we have applied every line of this standard, or every line of all the standards, with God's grace. With God's grace, I should say, I have practically applied it, either at one place or another place. I have practically applied it. That's why the grip of the subject will be there. Got my point? It's not like theoretical or simple explanation. When you have the practical experience, no, then the maza and the grip what you get, no, that is unbeatable and uncomparable with a bookish knowledge. Okay, right. You will experience that when you are in my class. Obviously, you will experience that in my explanation itself. You will feel, wow, like this you have to think, like this you have to link one from one standard to another standard for the deep understanding. Correct. Now, that is where the beauty of the subject can be seen, and I can show it. Okay. Yes, my dear. Let's see. Sir, borrowing cost, what do you do? Borrowing cost, whatever you have incurred on the acquisition of the asset or construction of the asset and production of the asset. Okay, right. What do you do? Is it the asset is a qualifying asset? If you say yes, then it will be capitalized along with the asset. No, sir, it is not a qualifying asset. Then it will be charged to profit and loss statement. Okay, yes, it is charged to profit and loss statement. Sir, first, what is a qualifying asset? Qualifying asset is an asset. It may be tangible asset or intangible asset, which necessarily takes a significant period, a substantial period of time to make it ready for its intended use or intended sale. Okay, if it takes a lot of time, sir, how much time? Generally, it is like 12 months or above will be considered a substantial period of time, but it is not mandated that it has to be 12 months. Generally, in the practice also, I also take like 9 months to 12 months period also, I'll consider it as a substantial period of time. Okay, but, okay, if there is a logic and substantiated, it can be substantiated, then you can take it less than 12 months also. It's a professional judgment involved in this case, my dear friend. Okay, right. So the first point what I discuss is how much time I should capitalize. See, there is a one point for the starting of capitalization. There is one point for the stopping of capitalization. Cessation, we call it. After this point, if you must be incurring the borrowing cost. Even though you incur the borrowing cost, you are not supposed to capitalize it. That should be charged to P&L. It should be between 2 points from here to here. In between, there can be a pause, that is called suspension of capitalization. Okay. Right. When should I start the capitalization? Yes. When should I have not given here. When should I start capitalization? There are 3 conditions. If you satisfy all the 3 conditions, from that day onwards, you are supposed to start capitalization. What is that? You should have started incurring on the qualifying assets. You started spending money on the qualifying asset. You should have started being incurred the borrowing cost actually, and the activities should be in progress. Which activities? The construction activity should be progress. This construction activities should include the very significant and important admin and technical activities also are going to be considered. Not necessarily always a physical activity. Yes, technical activities going on background. That is also supposed to be taken. Sir, when should I stop? Cessation. When the significant, I mean the qualifying asset is intended for sale or intended for usage. Is it ready for its intended use? Yes, sir. Yes, significantly it is ready for its intended use. Yes, you can start using from today onwards. Then till that time, you should capitalize the borrowing cost. So still it is not ready for usage, then you should continue the capitalization. So suspension, when should I do? Yes, due to whatever the reason, the activities are not active, that is inactive. Activities are not moving under that. So during that period, it may be for 7 days, it may be for 25 days, it may be for 2 months or 3 months. Correct. See, corona has happened. Some 3-4 months production construction not took place. This 3-4 months interest should not be capitalized. That should be charged to profit and loss statement. Correct. Whatever the reason, some cyclone has come, something has come. Correct. So because of it, I couldn't construct anything. Then that period, you are supposed to suspend the capitalization. The next discussion is how much to capitalize. How much amount of money should be capitalized? Yes, it depends upon the type of borrowing. Is it a specific borrowing or is it a general borrowing? If you say it is a specific borrowing, got my point? If it is specific, means the loan has been taken for the purpose of factory construction purpose only I have borrowed. Then what should I do? Whatever the actual amount of interest you are supposed to pay to the banker minus, if suppose what happens, no, so suddenly you have borrowed for say 1 crore rupees, but I don't need 1 crore rupees in one shot. I may be needing 10 lakh in this 1 2 months, next 10 lakh. Correct? This is what do you do generally? That money you will put in a small fixed deposits for 1 2 months and all, you will put it. Some small amount of interest will come. No, that interest income supposed to be reduced from the interest cost minus this temporary investments what you have made. No, that is you should do it. The net amount only supposed to be capitalized along with the qualifying asset. So I have borrowed it. I mean, I have not borrowed specifically, sir, but I have borrowed it for some other purposes. But that money is being used for the qualifying asset. Oh, under that circumstance, those are called general borrowings. A general borrowing will include even the working capital loan also should be considered. A bank OD also should be considered as general borrowing. Okay, so under this circumstance, what are you supposed to do? You have to calculate one capitalization rate. What do you mean by capitalization rate? That is very simple. Weighted average cost of your all the general borrowings. Oh, weighted average cost of borrowings means what? What is the actual interest cost you are bearing it divided by average outstanding borrowing. Outstanding borrowing means what, sir? Amount of borrowing into number of months outstanding divided by 12. Yes, number of months outstanding. Suppose I have taken in the mid of the year. So I have borrowed how much, sir? 100 rupees. 100 into 6 divided by 12, that is considered for average outstanding. You must have taken the loan in the beginning. Then 12 by 12 will come. Then full will be taken. Okay, like that it will be there. Then out of total amount of interest incurred, and you have applied this general borrowing rate, so I have incurred totally 1200 rupees as my borrowing cost. But by applying the general budget, I mean this weighted average borrowing rate, no, I have got 500 rupees. 1200 minus 500, 500 will be capitalized, and 700 is the remaining amount that will be charged to profit and loss statement. And this is the last topic of the standard, which is very important. I told you the exchange difference arising from the foreign currency borrowing, to the extent it is regarded as a borrowing cost. Okay, see, if I have borrowed in India, what would I have? What would have my cost? My cost is interest cost. Okay, sir, how much is your interest cost? 1,000 rupees, sir. Just 1 lakh rupees, I'll take it. But if I had borrowed from outside India, what is your? I have to pay the interest cost. Example, how much you should pay interest cost? So 60,000 is my interest cost. But because you borrowed from outside India, what has happened? You must have lost, because suppose the dollar value has got dollar value, euro value, Singapore dollar, whichever it is, value has gone up. So there is a correct as per accounting standard 11 loan. Correct. Now, loan is what? Monetary item. Is it supposed to be restated? Yes, it is supposed to be restated on every balance sheet date. Then if you restate it, then will you get a loss? Yes, sir. How much loss you got it? How much loss you got? Sir, I got 50,000 rupees loss. Loss is a last, whatever you lost is that is cost. Correct. So how much you lost totally? 60,000 rupees. Interest 50,000 rupees as a foreign exchange loss. So totally how much you lost? 1,10,000 rupees I have lost. If I had borrowed in India, how much you would have lost? I would have lost only interest, because I have borrowed in rupees. Na? So there is no foreign exchange fluctuation or something. So if I had borrowed, how much I would have capitalized? 1 lakh I would have capitalized. But by borrowing from outside, how much are you losing? 1 lakh 10,000. So out of 1 lakh 10,000, 1 lakh should be considered as a capitalization, because if it is being sent, this borrowed, whatever you have borrowed it, na, that if it has been used for the purpose of qualifying asset, to the out of 1 lakh 10,000, 1 lakh should be capitalized. 10,000 will be treated as foreign exchange loss as per accounting standard 11. I hope you have understood. Right, excellent.